What is your take on Europe right now? We talk so much about China weakening data there, but if you actually look across the earnings season, at least here in the U.S., quite a number of companies have come out and said that the weakness in Europe has been one of the things that took them the most by surprise.
Yeah, and I'd say that's absolutely consistent with an underweight in European equities, and using Europe as a funding source for looking for opportunities elsewhere, which is the way we're currently playing it. I think there are certain drivers to that view. Those drivers have been fairly persistent. One, as you mentioned, is growth. Growth has been persistently disappointing in Europe. And it's been a story where over the course of 2018, it was one idiosyncratic shock after another, but no full payback for those shocks, at least in the growth data. You can look at Germany, you can look at Italy, both of which had very sharp shocks which affected growth, and both of which have not been fully paid back. It's a less friendly external environment as well, given the exposure to the trade war and in general exposure to weak goods demand globally. And so there's a general malaise in Europe which characterizes the fundamental picture, and then you layer on top of that geopolitical risk and layer on top of that difficulty for banks, which have to do well as well.
On that note, totally get your point that some of the bigger economies like Germany are feeling the pain this time round, rather than just some of the smaller southern economies in 2010 to 12. But does that mean the ECB is going to be more likely to act? And even if it does mean that, have they got the flexibility to do so?
I think so first of all, trying to look at that from the perspective of a multi-asset investor, where's that gonna help and where's that gonna hurt? So once again, on the equity side, European equities, Euro stocks, is 18% financials. So it depends a lot what rates are doing to govern the performance of the overall index. And so the fact that growth has been weak, the ECB is on hold. There's a narrative over 2018 that eventually they'll turn hawkish, but that narrative keeps getting pushed back. And now it's years before we're going to see that. And so the prospect of rates staying lower for much, much longer, maybe even indefinitely this cycle, is something which is weighing on banks and weighing on the performance of the overall index. And so, another issue, I guess, would be the political risk premium. That's another contributor to why the ECB should be cautious. And you could characterize that risk premium as across all European assets. So at the margin, the fact that you have issues in Italy, issues in France, Brexit looming, all those things contribute to equities incrementally lower and bond yields incrementally lower as well.